Valuable income producing information on the internet. ultimatetradersguide.net. Futures Trade Radio is brought to you by the Ultimate Trader's Guide, your one-stop shop for the most valuable information, income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? I see I'm missing a window. Let me see if I can't do something about that. There we go. All right, there we go. Now we in there. Hope everybody had a good session so far this morning. Sound check is coming through pretty good. Let me get myself out of my ear. All right, so a lot of people kind of called for it, so to speak, and it, what actually took place. And that 0830 economic event with the employment information that ended up bringing a lot of selling momentum into the market, brought us to the open, and we chopped around a bit. They created some buying, which they used that buying to create stops to feed their continued momentum short. And, we're just, overall, we're just continuing to sell off and find value at lower levels, at lower prices. In all of that, I managed to pretty much have the same kind of sequence of events that I had on Monday. So, I didn't take the most advantage of this situation. I was being a little too patient with some of my execution, but it's still, at the end of the day, there's a lot of growth involved in that, and it's not as bad as it definitely could have been. And I actually, I got about 4 more minutes. When I decided to kind of jump on the live stream, and it was time to jump on the live stream, I wasn't 100% done with trading, so maybe I was still open to taking another position, even though I'm live. But I'm getting to the end of my window, and I want to stay disciplined in that, because there's always next week, and there's always the next day. So we don't have to, do everything all in one day. It's a marathon, not a sprint. And the story of the day, from my perspective, it's been a lot of front running from where I would like to execute. So I'll get my trigger, and then the preceding price action would front run where I would need to initiate. So I had a lot of trades that were in hindsight tradable. Actually ended up missing them, but it happens. The key for that for me is recognizing that, being awareness to that in the moment. So my awareness to that was present in the moment. So for me, I'm gonna put that in the win column. Now, from a broader perspective, the narrative has also been full of traps and full of where they would like to trigger participation, and then they're using that to build, liquidity where they need it, so our wholesaler can make money off the spread. And when I mean the wholesaler, just for clarity. I've been specific with that. I'm not just using the arbitrary they. So right now, from our wholesaler, we have this marked up inventory range between like 232 down to about 224. Pretty consistent supply point at 248. And as I use these terms, this weekend I plan on making a video that's going to be specifically defining these terms and what I mean by these terms. So it'll be a reference point for anybody that comes and listens, from that point, from when I release that video, you'll have that as a reference point to know what I'm talking about. So if I say something like they're taking an elevator, which I don't think is a term that I've used too much, as I narrate this, you'll know what I'm talking about, right? So I scripted that out, and that's that's on the way. All I gotta do is record it. So be on the lookout for that. Also, something else I kind of wanted to bring up today is there's this concept of taking quick losses that's popular with retail traders on the retail side of the game. And like, this was brought up, I hear this a lot of times because I stay tapped in to this industry, and I hear about taking losses quickly, cutting your losses quickly a lot as a technique for risk management within your strategy. So I would listen to a podcast several days ago at this point, to where they were talking about the difficulties of using that technique. And basically what it boiled down to was getting stopped out quickly at pivot points. So you'll set your, whatever your entry is, you'll get into a trade, you'll have your stop loss there. Price will be taken to your stop loss just to bounce off of your stop loss and proceed in the direction that you wanted it to go towards where your profit target was before you got stopped out of the position. And then so they continued talking about it, where they was speaking about the frustrations with trying to re-enter into that position, knowing that you just got stopped out when you were actually right. And the difficulty that they expressed was, well, where do I re-enter into the position? Because if I re-enter, that's to say I'm using a breakout method. Now I'm looking for the next, now I'm re-entering at the next breakout, which is going to be above my initial entry, the first entry that I took. I've, more or less created more risk for myself, because I don't want to change my initial stop. I don't want to change my stop loss. So from that, they didn't really explain what they meant by, how they were placing their stop loss, because they didn't go into extreme detail, right? They was pretty much kind of just, having a conversation, just generalized conversation. But from that, I take that they're using structure as a mechanism for defining their risk. And so, and I, that's the way that I like to approach taking stops, and I like to base it off of structure and not a hard number. I've done the hard number before, and for me personally, using structure instead of just having a hard stop loss that, okay, every single trade I take, I'm going to have a 10-point stop loss, no matter what the structure is, no matter what the market's doing that day, no matter the ATR, what kind of volatility we're getting. Every single trade I take is going to be a 10-point stop loss, for example, versus, well, I'm going to actually pay attention to what the market is doing today, and I'm going to use structure to define where I'm gonna place my stop, and then I'm gonna make sure that that's within my I'm gonna make sure that stop loss, I'm gonna have the math done ahead of time so that I can identify, okay, is this structure based stop loss, does it make sense with my account size to be able to take a loss if I'm actually wrong on the setup, right? So all of that really that's leading into, well, my idea of the best way to actually, or the way to get the most out of a technique or a method within your strategy to cut losses quickly. So if your risk management strategy or your risk management technique is to cut losses quickly, here's my idea of the best way to get the most benefit out of that. So it's going to start with your thesis, right? And so let's take this for example, okay? Let's say what we're doing right now, let's say I want to take a break above 256, right? And for this example that I'm using, because I don't take breakouts, so I mean this wouldn't be the most beneficial. Well, actually you can do it, this way. But I'm just going to use a hard stop loss for this example, right? And this hard stop loss is going to be 5 ticks or 5 points. So I'm going to take a break above 256. So if price breaks above 256, I'm going to enter long. Now, this is your thesis, and then you got a stop loss of 5 points below that, right? Which is going to be 251. And then you have your profit target. So I'm going to make another video where I go into more details with this, because there's a lot of moving pieces with this to really get the benefit of it. But you want to have, in this scenario, with how I'm breaking this down here, and this strategy or this technique that I'm using here, it's going to be based off the idea that you would want to have, or that I would want to have, a higher reward to risk ratio, right? Meaning I want to be able to make more than I stand to lose, right? So let's just say I'm going to have a 2-to-1 right? Which I would, if I'm going to have that train of thought, a 2-to-1 would be the minimum for me, right? I would prefer maybe a 3 or 4-to-1, but a 2-to-1, that's pretty average and pretty standard. So that means if I got a 5-point loss, a 2-to-1 would be a 10-point, profit taking. I'm taking my profit after 10 points, right? So that's just, I'm just using hard numbers no matter what the market does, all right? So in order for that to work, so we saw how this played out right here. And that's your thesis. Your thesis is I'm going to take the break above 256. I got 10 points as a profit taking point, and I got 5 points as a stop loss. So I would have taken that, and I would have been triggered long right here. And then I would have got stop loss at 5. I would have stopped out at 5 points. Now, if I'm going to look to re-enter, which cutting losses quickly, you're using that reward to risk ratio to your benefit. You gotta keep your thesis until your thesis is either is no longer in play. Meaning, you have your stop loss in an area where it's supposed to be that it's identifying that you're wrong on what you thought the market, or what you're trying to do. That your trade decision right there was wrong, right? So that thesis is no longer in play once if price is taken down to my stop loss, and then price continues to go beyond my stop loss, right? So if price would have kept selling off there, my thesis is wrong. However, since we're still within that range right there, my thesis is still in play. So if I'm looking to get back in, I wouldn't wait for the breakup here, because I'd be increasing my risk. I would keep the same price point to initiate the position, and I would keep doing that, so that way I have the same risk every single time. And we know eventually price is going to move. They're going to move price away from this area right here. It's not going to stay in this area forever. So you're not going to keep getting chopped around until you just slowly bleed your account out. What's going to happen is eventually price is going to either keep going up, which is what we're seeing right here, or price is going to it's going to fall down, for simple terms. So on this, with that train of thought, with that strategy, I would have took one loss there, came back with the same entry point, and then I would be in profit right now. Actually would have taken my profit with my 2-to-1 reward to risk ratio. So that's one example of my idea of how to get the most benefit from a strategy where your risk management technique is to cut losses quickly. Now again, I'm gonna make another video going into more detail about that and how you should actually identify your stop loss and all that stuff, or how I would identify my stop loss. Again, you can do what you want to do, but how I would identify a stop loss and how I would go about the whole process of building out that strategy to have a complete strategy to where I'm getting the most benefit out of it. And also, since and with that, in the Discord, I did I took a screenshot and I made some annotations so you can get the visual representation of that. So you go to the Discord, and it's in the strategy tips. I can't talk. It's in the strategy tips channel. You'll see a screenshot there labeled the quick exit strategy, and where I have it and annotated everything that I just went over pretty much of my idea, my thesis, or my theory for how to get the most benefit out of taking losses quickly.
That's exciting. I'm looking forward to these next series of videos.
Oh, I got a lot of them coming. I got the motivation. My motivation is at a high right now, so I'm taking full advantage of it.
It's pumping me up listening.
So right now our wholesaler is, we've marking up supply. We got our current supply point around 275. Also marking up, we're just in this markup phase. But we're, the energy is kind of mellow. This will be in a phase where I would say they're budgeting, they're balancing their books.
That's right. We're in price discovery. We've came to an arm swing high that was established where we found a seller that the algorithms notice, and for whatever reason that becomes our pivot. So now we're, as you say, budgeting. You mentioned, with you being so tapped into the industry, I have a question for you. Your way of that little that risk management strategy unique to you that you described with the fixed stop losses and re-entering a trade, beautiful stuff. So have you heard in the industry an approach to where you don't take your trade? So if my trigger is triggered, I'm now observing the trade as if I had taken it. I've got my stop placed, my target there. And I'm almost in a sense anticipating my stop get hit and anticipating after that taking place, that target then get hit. So in anticipation, I'm sitting passively then waiting for my trigger, my trade to be triggered, right? And then that stop get hit, and then that being my entry. Then I think where we can really use your way of your risk management metric, we can just slam that on now the entry for that trade, where I can use those variables. And now the initial idea for the trade where I had this risk, it's already been paid in a sense. That has already been paid, so I'm sitting at some advantage, assuming that I'm still on the right side of the trade with less risk. And I could even almost cut it in half now because I'm right. Yeah. I'm gonna be right into where I got stopped. And then since I'm entering at where I got stopped and I'm expecting the original take profit to get hit. And then I can really be even more efficient. And then see here, first off, are we talking about that yet? Because have you heard any of that talk?
I've heard it loosely as using your stop loss as where you would typically have a stop loss, kind of changing that and using that as your entry, but not in that level of detail. I haven't heard it. Nobody's ever really on a public space really went into detail about what exactly they meant and how to go about doing that. But they've loosely mentioned it, using your stops as your entries.
What I've specifically just described as a sequence is an observation of participants playing this game on a big perspective, right? So if going back to how you started this in the beginning with your observation on leaning into the industry, the retail side is getting frustrated with the fact that their stops are getting hit. The reason our stops are getting hit is because of structure, right? There's only so many ways that we can define risk when we're looking at a screen, period. End of discussion. There's only so many ways you can define risk, and those then become variables. So if we're all stuck within a box to how we can define risk, being structured being the best way, all right? There's good. I'm going to say there's a better way, but for now, in the retail space, the prime supreme way would be structure. Okay, so now if we're in this stage where everybody's then placing it off structure, it gets to a point then where if I'm doing this every day, this is my game, I'm a part of the function, I can see where everyone's had structure, okay? So then when we get to the next stage of this game and I now know how everybody places that structure, it's then super easy for me to just always now have a liquidity area where I know I'm gonna get the participation I need based off structure, okay? So that's what I would describe as the AI binary. See, this is what we're programmed into, binary. Where it isn't, up, down, left, right. That's okay, that's binary thinking, but what makes us human is the spirit to see. Is the spirit to see. And the spirit to hold the awareness of this binary thinking. Not to be trapped in the box. Alright, so without that getting too confusing, let's zoom back out into the whole point. And that being the conversation you leaned into. We're in the retail space. We're noticing our stops are getting hit. How do you re-enter? It's getting frustrating.
Right.
And with our turn of the conversation, do you need? Because if I wanna, go ahead if you need to.
Oh no, you're good. Right. I'm taking this time as you're explaining to do some of my back office stuff. So if you got more, keep going.
So when these stops are getting hit, all right, we're getting into this. The whole human part is understanding, all right, I'm now noticing that this is happening. You've got to then separate and see, looking in. So again, it's the spirit where we can actually see all of this. We're not trapped in it. And we're free. It's the whole, the point of being human. We have this thing called free will where it's ours. But you got to use it, and it's a responsibility. And this is describing in many ways what that means.
Yep.
So if you're trapped into that, you'll always be trapped into it. And see, that's where when we move to the next stage, and the next stage is it's been quantified now. So now that is now a fundamental part of the game. It appears as we move forward, where traditionally stops are placed on structure is now a fundamental part moving forward, going to be a location that must be touched because liquidity is there, and since we're looking for it, if we need to find it, we're going to go there because we know it's there. So if you're now stepping in front of it, and this again going with the whole spirit of a lot, when I come on here, how do you get in front of this to better understand who we are? So we've got to be in front of this. So if I'm now knowing all of this, I've laid down a sequence of how you can now take advantage of it. And the best part of it is, instead of being emotionally on the front end, you're now passive. Why? Because you're holding the responsibility of understanding that you're a big part of price action. You're a big part of the flow of where price goes. So if we're actively being triggered unaware, then we're just a big part of it, and we're part of this liquidity flow unaware. No different from an automated program. No different from an automated program. But if you are sovereign, you're holding this spirit and you're aware, now this is the time, I'm just going to hint, this is the time where you've got to be responsible and recognize. And again, I'm trying to be quick because there's so many layers to these things.
Right.
But what you could do simply, just to summarize, when my trade is triggered, I'm not going to take the trade. I'm going to monitor, measure the trade. I already have out my targets and my stop. I'm anticipating that my stop get hit. I'm anticipating that that's going to be my re-entry. I've already got a plan that best fits where I can capitalize that I've already paid up risk. I'm going to minimize it even further, and now my target, the actual gain for the trade has been increased because now I'm getting a better price. Let me tell you guys, that's how the best at this game play it. And I'm giving you a detailed way of how you can participate from this degree of awareness to which the game is played. So that's just one little clue. And then Rob's already layered in a way that you can fire in systematically. Boom, boom, boom. Let's get. You can now have your machine going in when it's triggered. Not triggered initially, right? Which is how we have them. Because we're programmed to be triggered emotionally. Now it's not an emotional game. It's passive. Now I understand my act. I'm watching my act play out. And now I can just passively get into it and move in it as a true reflection of me playing the game, sitting back, okay, holding the perspective where you're seeing. Okay, so there was a lot. This is another one of these shows, man, where no one talks about it. And that's why, because I know with you being someone who's leaning into many different spaces in this space, you still don't get these detailed discussion. You know why? Here's my observation as to why. Because there's very few who are holding the degree truly of these spaces. And
Right.
what do I mean by that? The experience of what it means to hold the awareness in these spaces. You can talk and say all kinds of things. It's a whole other thing to hold the frequency in these spaces. All right, I'm on mute, but I had to get in with that, how you started this.
I appreciate that. That added a lot of value, to why I started it off with. It's really good stuff. There was something else that I thought that you triggered. Now it just left me. I think it was about why I lean into wholesale, because a lot of, that's what it was. You mentioned like the fear aspect of getting triggered, or the emotional side, being triggered emotionally instead of just as a function of how it is. How do you come to the space? And this is why I'm leaning so heavily into this, explaining, breaking down this wholesale concept, because a lot of fear is based off the unknown. That anxiety, that fear that you have, or that most traders have, is based off of not knowing exactly, like what's going on in this, or what's going to happen next, right? And you can do all the analysis you want to do, but there's no real way, unless you're sitting on that side with the order book next to the market maker, what's going to happen next, right? But if you understand the functionality of, how they conduct this business, and understanding that also it's really no different than any other market, you just get to see it into more details. You get to actually see it happen in real time through the charts or whatever else you look at, right? So understanding from that, it actually directly understanding wholesale and really truly understanding it from however you understand it. For me, it has directly addressed whatever anxiety I had towards the unknown, right? So, that's why I'm leaning so heavily into this wholesale narrative. And it simplifies the board. That's what it's done for me. So what we're looking at now is, speaking of wholesale, we got this price action, which I refer to as taking a ladder, and we are, we're just dropping inventory, but we're budgeting along the way, and we're finding value at these lower prices. Now, we are building our inventory, we're building our warehouse. From the way that I'm reading this, it comes down to, if we want to keep seeking value below our session low, which is currently, like, we're near it. That movement right there pretty much just hit the session low, and you can see it right here in the volume above 11,200. So it becomes, are we going to use this inventory to pay ourselves and bring price back up, or did we budget this whole time to build a decent warehouse, but not be too heavy, not have too much inventory that we're holding, so that we can seek value lower and go to a new spot to where we want to set up shop and really build our inventory that we're gonna use to pay ourselves. So that's the way that I'll be looking at this from here on out. If I was to, if I was still in this and I was still trading this, I'm gonna leave it on this. This taking the ladder is very telling, and there's usually an event that happens, following this, and I'm going to explain that in the wholesale video that should be coming. I'm gonna try to get it recorded over the weekend, and I'll put it up as quickly as I can. So stay tuned for that wholesale breakdown video, and I'm gonna go ahead and wrap the session up. Appreciate everybody for coming through today. Don't forget to check out the Ultimate Traders Guide at ultimatetradersguide.net. It's a lot of good stuff that I put there. I put a lot of my exclusive quote unquote gems there, and a lot of the gems that I find across the internet, like the stuff that I find the most value in, I put it there. I'm gonna start to put more energy towards that as well. So with all that being said, again, appreciate you for coming through. Hope you have a good weekend, and I'll see you on the next one. Trade it easy.
How are you